Welcome, it's the Crypto Sniper getting at you for Friday. Yeah, it's kind of close of the week, and we're going to be taking a look at Bitcoin and telling you where we're at, but also giving you some potential good news and update on the general gist of things in the anti-fiat world. For those of you in the crypto space who don't watch the rest of the market around you, 360-degree analysis, we do that all the time in our community. And we're here to tell you that gold, the god market of anti-fiats, is making a new all-time high. And that is a very good thing. As it currently stands, you're at $2,508 on gold. And just to bear that in mind, fine friends, is that you're closer now to 3K on gold than you are to 2. And that's actually one of our next staging points as a target for precious metals of gold. And some of you might be going, well, what's that got to do with Bitcoin? Well, as we say, as the anti-fiat god market starts its move to reassert upside on a weak dollar, by the way, a weak dollar, particularly after the carry trade unwind. I think the weakest currency today is the yen, but you'd understand that. It had a super surge in strength recently as the carry trade had to reverse and unwind, and everyone was speculating in America to sell their risk on assets, sell their dollars and pay back that now more expensive loan as the Bank of Japan tightened rates at the same point as the US labor market was looking a tad sick. Let's have a quick look at that gold chart before we take you to Bitcoin to tell you what we think this means for Bitcoin. Okay, so what you probably noticed on gold is that we had a more traditional upside HVF continuation around the 2K mark. That was sort of back end of 23 up till around March. And then we were up and away, and this was great stuff. Very steady highs into the 2,400 levels. So that was a good move. That was continuation. Gold is so bullish, however, now at the moment, and don't forget, they told you China had stopped buying, but it seems not so at all. We've actually got a rising wedge, and we're melting up out the top. Now, many of you might say, but rising wedge is bearish, and generally you could indeed be right, but when you have a super bullish market, squeezes, even ones that go sideways, even with a slight ascent, actually are often just pauses before buying surges after major moves, which is what you got there and then again there. So we were then locked in the sideways market, but it was grinding up, making marginally higher highs, getting rejected. They don't want the canary in the gold mine chirping and telling everybody that they are in a debt-based fiat system collapse and should be preparing by saving in gold ounces. They don't want that. And Bitcoin as well, the higher beta version, but I'll tell you why you should have some of the gold as well. So now we are melting up out of this, and this is a positive. It leads first, and as we said in previous videos, it's something you should be watching in terms of expectations for upside subsequently for Bitcoin. So now let's get to the chart of more interest to all of you, but you do need to appreciate the value of having the overall market anti-fiat moving to the upside. So where are we on Bitcoin? Well, we're on the daily chart here, quite a busy chart, lots of alerts obviously. You can see that this is slightly different. The continuation patterns have actually had a downward grind on them. This brings me to the point where I highlight that less than the 5%, 4.7% was the total pullback from the all-time high of gold, and now it is busy not only reflating past to that all-time high, but past it. So in the space of this crisis, gold has actually gone to a new high and shrugged it off. It's important, having called the 70K and the capping descending grind line rejection localized high, that we highlight to you that in fact from 70K you fell the better part of $22,000 on Bitcoin, all the way to the downside. You rallied up to our splitter, which is the midpoint in the broadening structure, which has an overall descending gradient. And now you are still some way below your all-time high. So the reflation comes back first into the safest, most valued asset by the big money. You can see over here, you are, let's get that measuring tool in the right place, not to the open. Let's try that measure one more time. Go over there and come on down to there. Okay. Oh, one more time. Damn. Doing a great job here with the measuring tool on it. Let's see if we can nail it this time. Around 15.89 from the previous high being the 70K mark. So you're still 16% below that high point. This is the value. When are you most likely to need your money that you become a forced seller? In a risk on period or a risk off period? This is why the downside volatility, this is an important point. Listen up, catch my eyes. Don't look at that chart. Go away. Talk to me. Look at me. I'm telling you something important. I need you to hear it. The downside volatility of an item is actually more significant than the upside, because most people don't sell near highs. They keep expecting more of the good stuff. Greed keeps you in the trade. Oh, cool, I'm a multimillionaire. Let's become a billionaire. Let's become a centimillionaire. Leave it on. Add some more. That thinking. In the absence of method, greed keeps you in trades. Pain and necessity is what takes you out. Risk off periods are when you're most likely to sell. Can you now see the disproportionate value of an asset that only pulled back 4.7% in a major carry trade unwind? This wasn't the biggest crash of all time. I'm not going to tell you that. It's not a 1987. It's not a CV19. It's not a subprime. But it was a fairly reasonable correction. It may not be finished. We may rally and sell, have a second tier. I actually think with the yield curve inversion being really close to that zero mark, we're not far away from the main event. This could just be the tremor with a main event to follow. We're now hearing about the monkeys. You know what? Don't say. But, who knows what's being baked in for October. September, October, potentially a very dicey period. And of course, you've got the run up to the election that will or won't happen. I don't know. So, regardless of all the many reset type possibilities that we can talk a whole video full about, what you've got here is the fact that this particular asset at one point, when you probably would have needed it most, had fallen 30% downside, the other one 4.7. I've made this point before, I make it again. Downside volatility and risk off moments, you're most likely to call for your asset when you most need it. And unfortunately, those tend to be synchronized moments when lots of other people might also most be needing it. And that is job losses, the economy shut down, all small businesses shut up. You know how it goes. Spillers, absolute thrillers, all the way from Manila, plus all the immigrants, a little bit of war, who knows? But all those events tend to be ones that your businesses is likely to be affected by other people in a similar situation to you. So the downside volatility of an asset class is very important, and that's why we keep pushing back against sailor volatility is a feature. If you're most likely to call for the asset on the downside when you most need it, when you don't need it, you're hoping to get wealthier and let it grow. You probably need to be more aware of the downside volatility, and the volatility is not a feature. The stability is a feature. The rebought back up and to new highs in a very short time is a feature, because you could possibly hold on a handful of days. You can't hold on for months when you need to make a rent check or you need to buy food. Okay, so that point's made. So where are we now with Bitcoin, and what's our take? Well, at the moment, you can see that something we suggested could indeed be in play is the, can't get that damn tool to go away now. Hold on a second. There we go. We're now in our splitter components, and we warned in our previous video that this area will be the half step where pullbacks are indeed possible. So you're going to get a bit of churn. We highlighted areas such as this when you were rallying up there, and again when you rallied up there, you got a wick sell-off, and also after you broke down, you got a rally up to the splitter. So it is a secondary level of, it's not a level sort of price point, it's a secondary gradient, a grind line within the larger structure. It is not as critical as the basing descending grind line or the capping descending grind line, but it is a pretty interesting one for half-time breaks. And what you're getting here is there's again a little bit of a broadening. So you're getting a fractal of the macro pattern occurring again on a lower time frame. Let's show you that by dropping down to the time frame that'll do a better job of that. So here we go to the 4 hourly. And this is what we're getting. We talk also of the rule of 3. You'll learn about that when you book a call and have a chat to learn the skills and watch us implement this in the live markets ourselves, getting our regular webinar on Sunday in the self-study program and our live trading days and other things, and the opportunity as a self-study to potentially get upgrades when trading metamorphosis programs are made available again as first priority. And this is a broadening structure. Again, bull pole, so we got a little bit of rejection from that key 50K level. Bang, it did trade the 48 or 49 and some change, is it? I'm not exactly sure. It looks like 49 and some change. And then, boom, you bounced off the 50K round level with some vigor. And you actually had quite a strong leg over there. And then, breaks on. It ain't all over. A little bit, the money creeps back into the most secure, lower volatility to the downside asset that sees it going into a Friday and weekend on an all-time high. Gold. However, if that continues, people coming back into the risk on fiat alternative trades and no more the rush into treasuries and all of that on account of rate cuts, etc., and the talk of rate cuts and all of that stuff, what you're likely to get is other anti-fiats that are not the God market slowly getting some of the risk money coming back its way, of which Bitcoin is number 1 in the crypto subset of the larger anti-fiat set. And it'll be the first to move, and that should see dominance. And we've spoken to you about the upside HVF on dominance. In fact, Sol's looking a little bit off on its relative dominance. We actually have a chosen crypto that is not Sol. Again, if you're in our community, you'll find out about that and which one we like most there. But anyway, back to this. So Bitcoin is one impulse. We'd treat that as 1, Greek 1, let's call it 1. We'd call that 2, again, rounded out 2. You are in a broadening structure rather than a pinching compression of volatility structure. There's your capping descending again. Now, the fact that it's descending is positive because the general expectation, if things continue, and we're talking about the future, so it's a probability or a possibility, the general opinion will be that at some point you will break the capping descending grind line of the broadening megaphone to the upside. But hold on a minute, you're at the splitter of the smaller setup after having made the splitter of the bigger setup. So you literally are, this is like Malebranche's fractals. You're in something that is like this in this state, and inside of that state there's another something, and you're within the same place inside the molecular level on the lower time frame. So you're at the splitter now of the smaller structure, and you could chop, churn, you could even, if you're unlucky, I don't think this is my highest probability revisit to the downside. I think you're more likely to wind up slowly over the weekend and in due course make your way back up to the high side of that capping descending grind line. So again, a bull pole, a descending megaphone inside a massive bull pole and a much larger megaphone structure. But you will notice that often these pauses occur when you are getting pauses also in the gold market, and the gold market has moved first. So if we take it back up a time frame, we can highlight this and show you that in actual fact, the gold has been in a broadening structure for an extended period and is only just breaking now. And so has Bitcoin. In fact, Bitcoin's been cooling its heels since March 24 on the daily chart and actually hit the low over here in August. So Bitcoin's actually had quite a lengthy pause zone as well, but came up in a very similar fashion. So there is a little bit of follower syndrome to Bitcoin relative to gold, and it's got to work its way to the upside of the broadening structure and start a breakout above that red line. And to do that, it first has to break that red line, which is at the splitter level of the other side. It could be rejected one more time. Maybe we haven't done enough of a third impulse there. So we could go up, we could come down one more time and bounce on the splitter and go up, or even go all the way to the lower end. Again, this is going to be determined by data. We had a very data-heavy week. That's got a lot to do with the dollar. You follow that on Forex Factory to see what the news was. And you could see that on Tuesday, it was Tuesday, we had a lot of US news. You had an undershoot on core PPI and PPI on the monthly basis. That was contractionary, which means producer price inflation. You had an undershoot on CPI year on year, and otherwise a match on the monthly and the core CPI on a monthly. And in a bit of a mixed bag, the Thursday news was a little bit making the economy look a tiny bit stronger, with a very low expectation on unemployment, 236. You actually came in below that. And on retail sales, you actually came up quite strongly above, both on the core level and the retail sales generally. So a bit of a mixed bag of indicators for the dollar. But how has the dollar done? It is part of that story. So if we look at the traditional measure of the dollar, which is the dollar measured against the failing European countries of Euroland, United Kingdom, and the Japanese yen, a small amount of it in there. You also have the Swiss franc, which is probably not such a failure. But you will see what we will call, in our FX trading with our community, an inverted setup that we anticipate downside breaks for the dollar. So we are going into a new week, we think, starting Sunday session. You'll be watching this over the weekend. Sunday session, a weakening dollar at the open, generally in lieu of how people have chosen to interpret the data. That's what the charts are showing. You may first get a little bit of a rally to not run this before breaking down and to make our third impulse for what we think is a downside break. We are actually long the euro against the dollar, believe it or not, and another currency trade that you can find out more about when you choose to join our community, which you can start by doing by getting the theory under pack on our self-study, which has payment plans to make it affordable in difficult times, and begin your learning, yet still have our webinar on the weekend and our live trading days as ongoing support. And before your period is up, an option to upgrade to the full community when we make trading metamorphosis programs available again. So you can see that generally my overall view on the Dixie is that it's been losing ground on this time frame, the 4 hour. 4 hours not the biggest time frame of them all, but it's pretty indicative of short, medium, near term. Likely for Sunday, going into Monday, Tuesday, I can have that degree of high beam visibility for the 4 hour. Overall, downside break, more dollar weakness. So that doesn't sound like an immediate bounce back for the dollar, but that will keep a bid under the stock market. It's likely to keep a bid under the Bitcoin. It's likely to keep a bid under gold, going to new highs against a weakening king fiat. Dollar is the king fiat in all of this. We can take you up a slightly higher time frame just to see that in more detail. That's your daily. And you can see back here, our last localized low was at about 100. We got violently rejected at 100. Recently, we have been softening. We came out of that rising wedge quite brutally. We made another rising wedge in the dollar index, and we've come out of that quite brutally. And you're now making what we think is an inverted. This is going to be a real weakening spell for the dollar since July into the August, September, going into October period. And this you've got to bear in mind in terms of the election as well. So by doing this, they keep the debt markets rates lower by allowing the dollar to weaken, which allows the debt markets as asset class to go up with the interest rates potentially facing cuts at the next meeting. Weakening dollar in that environment, long-term strong for Bitcoin, however, gold moving first. Once the confidence returns after a rather shell shock market from a little bit of the yen carry trade unwind. Okay, I hope that's been useful for you. There is a very important crypto only one I would consider beyond Bitcoin in the majors that is actually showing a greater degree of dominant support, but I would still largely be looking at the Bitcoin trades to the long side, but don't necessarily rush in. See how it hangs out with regards to waiting for that third little move inside the fractal that we showed you. On balance of props though, if we're breaking out of the top side of that broadening structure on the 4-hour, you're likely to make a move all the way to the top side of the capping descending grind line on the daily time frame, eventually leading to a breakout and a wind up like that gold chart we started off with that showed you the support of 2000 and the lovely HVF there. That could then see Bitcoin start a journey even higher. I'm getting a little bit further down the road now with what I'm talking about, but Bitcoin dominance, we didn't cover the dominance, so we'll go back and finish on that as I discussed it. The Bitcoin dominance still owes us a target and is in decent shape towards attaining that. So here you go. We've got a target of around 58.5. You've pulled back since you ran the 57.63, 57.73 odd. You've pulled back since then and you're making some headway. We've got to get above the 58. And that draw, I can show you, the draw tool only available from us. Don't forget to go to marketsniper.com and book a call if you're interested in eventually having access to that, which will, along with the understanding of HVF method, will be an incredibly useful, empowering tool. It is giving you real information. You can see after the first interim, a major pullback there. You ran the second interim after a push through, a major pullback, and now we are going on again in 58.33. Probably run the 58.5 for a full target performance. So once that's done, our favored big cap current favorite, which is no longer Solana, that has been showing relative weakness recently since that ETF cancelling and all of the other thing, or pushing out and a couple of other aspects, you will see that there is in fact a good particular macro crypto which will probably outperform Bitcoin in the performance of making this target, but Bitcoin is still one of the best for upsides, and as with gold, so Bitcoin is the boss of its set in crypto land, and we would expect it to run the 58.33 to the upside. Currently at 57.32. We've been talking about this and discussing this since the 55 levels, so you can see the progress has gone well. So for most people, Bitcoin is probably a safe bet. Okay, until we catch you next time, we're anticipating Bitcoin recovery during this period. We want to see us make it back up to the splitter on the larger time frame from the fractal, and thereafter move all the way to the top side of the bigger daily structure, which could eventually lead to a breakout, potentially some winding up requiring first, and then a major move breakout to what we've called the $145,000. I don't think that's this year, but who knows, for a resurgence in the anti-fiat on dollar weakness as well, and the potential for rate cuts as part of a tailwind amongst others. Okay, until next time, thank you very much. Don't forget, book those calls, get started. By the way, if you're sitting and waiting, I'm here to tell you that the debt markets are crashing. The debt and fiat markets are crashing. You need to build wealth. You need optionality. You need to be out of Western nations. You need funds outside of those zones. There's lots of things you need to do. It's difficult to achieve them all. You don't know how much time you have. Start taking any form of action and you are immediately putting yourself in a better place, and mentally, in terms of the psyop of this great game, you are straight away in a stronger place. because of action taken. Not everybody is 100% ready for 100% of what's coming. I don't expect all my plans to work out perfectly. However, I'm better for having some than none at all. I'm sitting here talking to you and say, don't wait till you have money to be protected from capital gains tax. If you have a great alt market, do you have a bank account you can directly from a crypto exchange deposit and clear and spend without any inquiries and any capital gains? This is a simple question. Offboarding in crypto. Not many people do. We have real structures proven, worked and tested. But you may need to leave your country of birth or your country of work or your country of passport. Guess what? These are the times to do it. There's an inversion perversion being done. Those that take action win out. The rest sit and hope that I'm wrong. And unfortunately, the news that is coming out is showing that everything is proceeding exactly as we have anticipated it and called it on repeated occasions. So don't take the chance. Start taking action. Relieve that anxiety you feel in your chest. Start enjoying your life and days again because you're making plans. That's a key point. To do that, it starts by hitting that link below and having a chat about what you can do for yourself, for building wealth, protecting wealth in reset times, not normal economic environment, reset times where there are active participants working against you with new to the great leveling of the middle classes down to serfdom. Don't let them have it. You've worked hard for everything you've ever got. The inflation they're creating is taxation upon you from the bottom up. Refuse it. Recognize that you don't owe these people any further money. Start acting for your family, your future dependents, and start today. And it all starts with that link below. Until next time, I look forward to hearing from you all, and thanks for sharing and liking the video. Bye for now.